Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the commodities space, we're going to look at gold, the dollar, some miners, oil and natural gas. We've certainly had some significant events on the longer term time frames this previous week, and we'll go over that. The most notable is between gold and the dollar. And so we're looking at the dollar right now, and we have clearly lost the weekly uptrend. It was a big bear week, and we had a higher low at 97.03. That level being lost is notable. So we're not necessarily in a weekly downtrend now. To see a confirmed downtrend, I need a weekly lower high and lower low, but we can certainly anticipate when we do bounce, it will be a weekly lower high, considering how much we have pulled back from that high, which ended up being that double top that rejected the price, 98.33, 98.37, and then this big pullback. So I want to know what's going on the monthly time frame. We have lost the weekly uptrend. What's the monthly doing? Monthly time frame for the dollar is still in an uptrend. The most important support is 95.03. So if you are a gold bull, you want to see this level break, and we want to be in a monthly downtrend on the dollar. So I anticipate that the first test of 95.03 we're going to hold, and the scenario where if we're going to break that level, in my opinion, we're going to find a support level to bounce somewhere from where we stand now, and then we'll set that weekly lower high, and it would require that confirmation of the weekly trend change with a lower high and lower low to see the monthly uptrend lost, in my opinion. Let's go out even further. What is the 1 year time frame doing? So looking at the 12-month chart, we can see we have our high of the dollar, the low of the pullback was down in 2008, high of the bounce, and we have this higher low. 88.25 is the most important support level on the yearly time frame. But again, the monthly is what I'm most concerned with for the dollar going forward for the rest of 2019. So we'll be watching that support level very close. Looking at the dollar, or gold, we've been pointing out the monthly multiple year equilibrium that's been setting up that is now just breaking. And we have a very clear tightening range, but the break is not very clear just yet. So we do have a slight caution on that fact, but the fact that we did break resistance of 13.46, albeit only by $2 or less, increases the odds that the bulls are going to break this monthly chart. We're overextended heading into this resistance. It wasn't the ideal setup, especially for bullish entries, because when the break occurred, the daily time frame very overextended. We've seen a higher low on the daily chart 6 days in a row. We had things like the 4-hour RSI up in the 80s, very overextended. So ideally, what we want to see is at least a daily higher low of healthy consolidation. And if we get the daily higher low and higher high, once we do top out, which I anticipate will be in the short term, just a healthy pullback for a daily higher low to form. If we get the daily higher low and higher high, that will make the monthly resistance break a lot more clear. Then we have 1366 and 1375 as the next two major levels for the bulls to get over. And with gold, there's definitely a factor with market weakness, seeing a gold influx, but the most important factor is what the dollar is doing, in my opinion. So ideal scenario, market has fear and is going down, and dollar is dropping, but gold can still go up in a strong market if the dollar is going down. And that's actually the most beneficial setup for the bull miners, because the bull miners are listed on stock exchanges and they have correlations to the overall market. So the bull miners perform best when we see the market go up and gold go up at the same time, which means the dollar is going down. So if you're playing those miners, you want a strong market, a weak dollar, and strong gold. If you are playing only gold, you probably want a weak market and a weak dollar. So it's a little bit of a different setup, but as of right now, it's the kind of environment where the bull miners have been favored. Let's talk red flags. If we were to see gold lose the weekly uptrend from here, it would be a red flag. The bulls have a lot of space to work with to maintain higher lows, even if we top out at 13.48 and have to form a weekly higher low at 13.20. There's no red flags there because we can anticipate a weekly higher low will form. So lose the weekly uptrend without clearly breaking these resistance levels, and then we're going to say, okay, that's a red flag for the rejection from resistances. But again, that's low risk at this point with the current setup. So looking at the bull miners, there they are performing in a significant way. And again, the 3 times leveraged ETFs, NUGT and JNUG, performing in a big way. Let's just go over percentage gains that they saw today or this week from the low, or I should say from this move because it started last week. 44% in 7 days. And that's why we're keeping an eye on this space, because if you remember back when we saw the gold market explode and the bull miners explode back in 2016 to the end of 2016, there were big time gains there. And UGT at that point ran 900% in less than a year. These bull miners can get going if the market is strong and if gold breaks out. So let's look at the longer term time frame on GDX. Again, it's very clear. Let's just compare the daily time frame. Look at this move on GDX, the senior miners, and look at the move on GDXJ, the junior miners. Friday, we did not break the high of the bull move. We're leveling out a little bit, and we look closer to consolidation than on GDX, which its high was hit on Friday. So again, we've been saying this for years at this point, but in general, if you are looking bullish in the miners, you want to be looking at the senior miners, and if you are looking bearish at the miners, you're looking at the junior miners. So I personally would be watching NUGT over JNUG in this current market environment, because that has what historically has been shown to us as far as the direction to be looking, or as far as which name to be playing. So we're anticipating a healthy daily higher low to form in these miners next week. When we top out, we have a higher low every day the last 7 days. So if we break that pattern on Monday, that tells us daily consolidation is underway. And again, we'll assume it's going to be healthy. So for the senior miners, what they need, they don't have a break yet. And gold has gotten the bull break, but the miners don't have it. So we have our low on the monthly, our high of the bounce, our higher low, and we have to break 2370 for a higher high. That's still about 4% away, a little bit less than that, 3.5%. And if that break takes place, it will be notable, because we have not seen a clear confirmed trend change since that top after that massive bull run back in 2016. We had the low, lower high, built some support, couldn't break resistance, broke support, and then it was just lower highs and lower lows. This would be the first trend change, and you could call it an inverse head and shoulders pattern as well, with the left shoulder, the head, and the right shoulder, if we can break out over those levels, and it will be notable for these miners if that does take place. So miners need more proof. Gold is a double top. It needs a bit more proof, but the bulls have the advantage. What we've seen the past week shifts the odds on the longer term time frame more in favor of the bulls. So GDXJ, again, a little bit weaker, but very similar setup. Look at the monthly time frame. That's where the weakness really shows here. So we have our low and our high, similar to the senior miners. Higher low formed, but look at how much distance we need to cover to see the monthly higher high. With where we closed out just this last week, distance needed 13.5% to get to resistance. For the senior miners, distance needed 3.5. Huge difference. So again, that's probably the most clear time frame for showing that the senior miners are stronger than the junior miners. So, strong market, strong gold, great for bull miners. Weak market, weak dollar, great for just gold. And right now we have a strong market, and we're looking to see, can the market get back to all-time highs? And if the market gets back to all-time highs while gold is making its way to the upper 1300s, these bull miners are going to look good. Oil on the daily time frame finally getting its bounce going. Let's look where we stand on the weekly. It's a bullish reversal candle on the weekly time frame. Let's not forget our longer term outlook. The monthly chart, we are looking for a monthly higher low to form. We certainly don't have enough evidence that our monthly higher low has formed at this point. We need, at the bare minimum, a daily trend change, and then to be really confident it's a weekly trend change. But if we were to form a higher low here at 50.59, we would see this monthly time frame continue to tighten up. Best case scenario for the market bulls, which are doing better than oil. The correlation with the market favors the market bulls, because the market bulls this past week saw a huge bounce get going without any help from oil. And then in my opinion, the oil bounce Thursday and Friday added a little bit of extra juice for the S&P 500 to bulls to keep their pretty insane bounce going through the week and through the end of the week. So I need to see oil change the daily trends. Nice bounce. We were cautious of the bear flag on the daily time frame. The bulls are doing everything they can to negate the possibility of a bear flag. But we know we're not changing this trend anytime soon. Anything under 59.67 is just a daily lower high. We need to top out on this bounce wherever it is, and then we need to see a higher low compared to 50.59, and then a higher high. So just drawing it very roughly, what it would look like for the trend change. We see this bounce, we top out early next week, wherever it is, maybe mid next week if the bulls are real strong, pull back, form the higher low, and then change the trend. And SPY has to do the same thing with a higher low and higher high to confirm the daily trend change, but SPY bulls have way more space to work with after the size of the bounce we've seen to this point. So we need a daily trend change in oil to have confidence in the S&P 500 making its way back to all-time highs. If we were to see oil drop down and break $50 from here, it would slow down any market momentum to head back to those all-time highs, in my opinion. And with the correlation we've been seeing on oil and the market over the last 6 to 12 months, I want to see oil get some strength in order to believe that the S&P 500 bulls can head to all-time highs. Natural gas still weak, lower high every single day for the last 7 days. And if we break that pattern, we're just looking for a daily lower high compared to 2632, not changing that daily trend anytime soon. And then when we bounce on the weekly, we're just going to look for a weekly lower high as well. Bulls are nowhere near shifting momentum at this point. Tons of work to do. Bears have a lot of favor overall. I had been watching the potential for a falling wedge setup on this weekly time frame, and it looks like we are breaking below that support line. So not paying attention to the bulls in the natural gas space anytime soon for me personally, and the bears continue riding that trend. So gold and the dollar will be on top watch next week, as will oil. That's who I'm personally always concerned with most because of the implications on other markets as well. Oil for its implications on the S&P 500, and of course the longer term gold pattern and the potential upside that these miners do have. 900% gains in 3/4 of a year is massive. Certainly not expecting that at this point, but gains are there, and we'll see if these bulls can change their monthly trends. I appreciate you watching. Have a good rest of your weekend. We'll end it here with a beach in South Carolina, and I'll see you all in the near future.